What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for PayPal holdings with the ticker symbol PYPL. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So just a reminder, please make sure you hit the subscribe button down below if you have not already. I'm trying to get the channel to 10,000 subscribers by the end of the year, so that's my goal. And let's begin the chart analysis right now. So last time I looked at PayPal was on Saturday, and you can see that from Monday and Tuesday, price basically has been trading sideways since the very large drop down. So that's why I put a green channel on here to represent the micro range that price is inside of. So that's what this little green range shows. That's why I put the text new here. So I can go and erase that just to it was remind myself that I changed something on the chart, which was this drawing. Everything else is practically the same as last week. So since last week, there was a very large drop down due to that earnings report. And it's kind of funny how it's a repeat pattern. A repeat pattern is when you see a similar pattern in the past occur again. And that's what happened right here for the earnings report. Price came right back to the same level where we saw the large gap down. So you can see there was a large gap down, basically right at the same level and basically right through the same support. So this 67, 68 was support, and price just broke right through it. So we're probably going to do the same thing, not exactly, but price similarly, where we kind of see the sideways trading price action, and then we see the last drop down. So that's what can occur over here. Basically, the market just taking a break from taking a huge dump. So it needs to just let the EMA catch up, and the market just needs to take a break. So that's why we're seeing price just kind of go sideways. I mean, right now, if you had asked me, I think we're still bearish in the long term, because long term meaning maybe a couple of months out, as long as we stay below the 67, 68 level. We got above it and it looked pretty good, but you can see that price just got back below it, so that's not a good sign. So this tells me that the measure move target is still in play. So you can see those one large leg down, price pullback, and the second leg has not been reached yet at the 52 level. It looked like it wasn't going to be reached when price stopped at the 59 level and broke through the 67, 68 level and traded much higher. But then all of a sudden we saw another sharp move down. So since this sharp move down and this swing high right here was below the previous swing high, this tells me that the measure move is still in play and the bears are trying to reach it. So that's why the chart is looking still bearish in the macro sense. In the micro sense, the price is still looking bearish, but it's turning to neutral. That's where we're seeing this range. Usually ranges are going to be neutral, so we're seeing some balance in the market in the short term. So that's why the price is kind of neutral right now. So if we see something like this, either we go down right to this 59 level, which I think we can reach, or we break out towards the upside, find resistance at the 67, 68 level, and then go down. So either way, we go down from right now, or we pull back and go down. So that's the couple of ways that price can see lower price targets. Let's say the market has bottomed and we break to the 67, 68 level. So that's a very bullish sign. If we do that, I want to see price fill in this gap right here. Or if it does start pulling back, I want to see it hold this level for higher price targets. So that would be another bullish sign right there. If price can break it and hold this 67, 68 level. But right now, there's a good chance it will be acting as overhead resistance, because in the past it was support and then it turned to resistance. Price broke through it, but it did not identify it as support, and we just broke right through it down again, through it again. So there's a good chance if price does pull back to it, it will act as a overhead resistance. So PayPal, unfortunately, fortunately looking bearish in the macro sense, and going to be probably in the short-term sense. Right now, it was bearish in the micro sense, but now it's turning into neutral. That's why we're seeing this sideways trading occur. But in the grand scheme of things, this is still bearish overall. So PayPal is still very close to the all-time lows of this downtrend at the 59 level. We're only a couple points away from that, so that would be the next target. If we just start reversing right now, then this overhead resistance will probably knock down price. If we see a massive amount of aggressive buying occur, then obviously we need to break through the 67, 68 level and find support from it. Either we do that. Another thing that's rare is that we just shoot straight up in a straight line. I mean, that would be pretty rare. Even in this uptrend right here, you can see there was a couple moves down. There were pullbacks in the downtrend. It wasn't like a straight line up. So that's why I'm saying it's kind of rare just to see price take off like that. So it needs to just, create support or find resistance. The market doesn't move in straight lines. It likes to test levels. So this level would most likely can be retested if we see a breakout towards the upside. But right now I'm just leaning more towards the downside until we see more data on the chart. So basically PayPal, my target is still the 59 level unless something drastically changes. So that's all I have on the daily chart. Let's take a look at the weekly chart. Here's the weekly chart. Overall, still practically near the all-time lows of the downtrend. Not the all-time lows of the stock, but all-time lows of the downtrend. PayPal, unfortunately, has not reversed like a lot of other tech stocks. So financial sector might be seeing a bigger hit because of the banks and all that stuff. Not entirely sure, but PayPal is still looking kind of weak. You can see that we're still below the EMA, this blue line on the weekly chart, so that's not a good sign. Basically, that's telling me that price is continuously making lower lows, lower highs. There was this little trend line that price broke outside of, but it came right back in that trend line, so that's not a good sign either. So PayPal is still unfortunately looking bearish unless we can break back above that 67, 68 level and hold it. So PayPal is still looking bearish. In the just the past couple of days, it's been practically neutral. It's just trying to make up its mind if it wants to drop down right to the 59 level or pull back to the 67, 68 level and then drop lower. So it's still practically deciding. But overall, still bearish. Still, trending lower, and that's all I have for PayPal. Until we can get above the EMA and stay above it, I can't be bullish on the chart overall. It's still bearish, in my opinion. So that's all I have for PayPal holdings this week, Tuesday, and I'll give you guys an update most likely Saturday. This is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.